Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome back to the video. In this one, we're going to be doing a candle-by-candle analysis of the S&P, good old candle-by-candle psychology, and looking internally on what each candle is doing and what each candle is kind of telling us is happening. And so we can kind of figure out what the best approach is at any given time and kind of follow through with what the market may be moving along with at that point. So starting off, we're kicking off with a gap to the upside, and if we zoom out a little bit more, we can see that this is actually an inside gap up. And more importantly, we're gapping up directly into the previous swing high. This is a really awkward spot to be opening up at, and realistically, a lot of sellers will be looking to reject off of this high. And given that the first bar is that bearish, it's pretty likely we see some follow through, at least from the perspective of shorts, if they can trigger underneath. At the very least, if they do trigger underneath, we can assume that they will be scalpers, as well as swing traders looking for the gap closure all the way down to 43.36 quarter. If they're looking out for a target at 43.36, down in that area anywhere, then realistically the probability is not very good, which is fine because the reward is incredibly high. From a scalper's perspective, at the very least, the reason I say scalp in this case is because we're opening up inside of a range which really isn't proving anything. And if you notice, if we draw falling resistance across the highs, that doesn't exactly give us a whole lot of room other than a scalp. So the only way that we can realistically make this work to the downside with any probability is a scalp. Otherwise, we know that it's very low probability and likely going to be not successful, but a good reward if it is. We've got bear continuation to the downside. The sellers are following through. We've got more bearishness, and just looking at the original volume starting off on the 5-minute here, we've got ourselves, let's see, a POC weighted at 63.25. So with the POC weighted at 63.25, we can see that the sellers are continuing to reject off of that area. It's likely we see a bit more momentum to the downside to at least satisfy the sellers' objectives, which is what happens next. We get a little more continuation down, but notice the market's having a little bit of a hard time closing underneath that. That doesn't necessarily mean that the market has to completely reverse and go screaming all the way to the upside, but it is to be noted that if we're going to get through here, we know that this is now a zone of support. There's so many sellers taking profit there that they're creating a support level that the market has to work through, and if we can start continuing back down, breaking more bear bar lows, we can kind of keep that going. All right, that's not exactly what a lot of traders are going to be looking for. We do have a very weak bull bar and not a whole lot else going on. And from the continuation perspective, we've got 3 bear bars down. Sellers will be looking for the market to follow through. If anything, selling above a previous candle's high is one of my favorite ways. Maybe above the previous 2 candles is a double top. Sellers will be looking for another leg to the downside either way for this continuation down if they're able to get it going. All right, a little more reversal here, and that adds a bit more context. We already know that the sellers who were looking at that bigger picture saying, you know what, I don't have room for anything other than a scalp. Those are the traders who have now created a bit of a bottom. We're starting to see the market close higher, and we're seeing the market close above the previous candle's high. That doesn't very often happen unless it's going to follow through a little bit more. Like over here, it followed through a little more. That doesn't mean that it has to go a million miles an hour or go screaming through the top, but it's likely to at least keep going a bit. Or it will go screaming through the highs and the market just, wow, goes ripping through the top, huge bull bar, and we do have a little bit of candle gapping here, but to be fair, that's already been taken care of. This giant move to the upside is starting to break away from the previous structure, and one thing that stands out when we have this is measuring from the low to the high point before the reversal, and then taking that and putting it to the upside as an upside target for the market to reach out to. So at the moment, as far as a full-blown reversal, 43.79 is a major upside target that the market's going to want to try to reach out to and get. There's no real big candle gapping or anything like that, but with this big of a bull bar, realistically, traders are going to be looking to buy any pullback that they can get. If buyers bought the close of this, let's play devil's advocate, and they put a stop underneath the low, that does not fit a scalp. So if a scalper is going to come in on this, they're going to have to get in, let's see, got a little wiggle room yet. If a scalper were to come in on this move, they would have to have an entry point at 71.25 or better in order to make it valid for that upside objective. So here again, scalpers will want to get in, but they're going to have a hard time. They can't buy the top of the candle because there's not enough room. So they've got to wait for a slightly deeper pullback to try to get that job done. Let's see if they're able to get it. It doesn't, and it goes screaming all the way up to the highs. Now we have some candle gapping. We've got a bit of a different scenario. Now, we are hitting the major double up objective. That's a problem, and given the fact that they couldn't close above it, would still suggest that a pullback is coming. But we have candle gapping to the upside, which is saying that the market should at least be able to reach out a bit further, and candle gap objectives now open creates another upside objective up here at 43.86. So although we did originally have a bit of a barrier in our way, we now have an open door thanks to the candle gapping. So because of the candle gapping, if we can get a pullback back down to the previous low, let's, again, devil's advocate, we'll go all the way down to the low. That doesn't fit a scalper's objective inside the highs. That's kind of a bummer. But it does fit a scalper's objective inside the major objective at 85.50. So we know that bulls are still interested. They just need a pullback, right? It's not pulling back. Still not pulling back. More continuation to the upside. We have more candle gapping. With that candle gapping to the upside, that has upside objectives just a bit further right here. Both are still open, so we'll keep an eye on both. But at the moment, the bulls are still looking for that pullback. If they were to buy, let's say, directly underneath this last bull bar and put our stop underneath the low. If they were to buy there, their scalp target does not fit inside the nearest objective. That is a non-optimized entry, which means that we can't take that one. It doesn't work. So we've got to migrate that down a little bit. What about the bottom of the gap? If we have an entry at the bottom of the gap, if they fill this first gap in but leave the second one open, now our targets fit inside that next area. That makes a lot more sense. So again, buyers want to buy, but they can't buy too high up here because there's just not enough room for it to work. So they've got to buy a dip. It hasn't happened yet. We've still got a straight string of bull bars. Let's see if we can get a dip. All right, there we go. So now we finally have a little bit of a pullback down. They did, unfortunately, close this gap completely, so that gap is gone. But again, the only way that this trade works was for that to happen, kind of expected. They also measured in this gap just a little bit. So they narrowed in the next gap a bit further, which means that our larger objectives are just a bit closer in, but we're still looking pretty good there. Whoops. Let me do this again. I accidentally deleted the wrong thing here. There we go. So scalpers have their upside objective to try to get completion to the upside. And even if we had a lower entry, let's say as an example that a buyer was buying at the low of the bull bar, that entry point actually allows a scalper to get out ahead of the top. So there's a lot of reasons why there's such a big wick down here, because buyers are buying in like it's going out of style. Inside bull bar suggesting that we are going to start seeing some follow through. And we also have something else that kind of stands out. Maybe a measured move here. The measured move is way the heck up there, but it is something to consider if this starts going crazy. Oh, okay. The market's stalling out a little bit here. We're running into a bit of a brick wall. Let me move this over here. It seems like we've got a big chunk of resistance here in the 43.79, 75s to 80s. There's a little bit of difficulty going on here. We've got to try to churn through this. The bulls have not satisfied the scalper's objective yet on the closest one. And from the widest, if we're a little bit further up here, at that point would be there. The upside objective would be above the highs, which also hasn't hit yet. So we've got a lot of bulls who are still waiting and not really having to do anything. There we go. Nice pop to the upside. Look at the rejection off the target. That's unbelievable. So phenomenal rejection off of that objective and seeing more continuation to the upside. We do still have those wider targets. That candle gap objective is still above. So the market doesn't necessarily have to stop here, but look at the rejection that we're seeing. It would not be a surprise at all to see the market stall out a little bit. And if we go from the bottom all the way up to this new candle's high, because this is a new top, we're demonstrating some real weird POC volume, 79.75. Let's see what they do next. All right, next bull bar coming back up, but not closing above the next objective. We still have open candle gapping, and the POC is starting to get a little bit sunk down here. That's a really big problem for shorts if they're trying to build in, which would suggest that their average is around 79.75. If they're stuck from that point, then realistically, bulls will probably buy in from there, and their stops will be underneath that most recent swing low. Now let's see how that fits. Again, it's probably going to be a scalper. But here again, we can see this fits. If they were buying on a retest of the POC, a scalper's objective fits back inside the highs if their stop is underneath that most recent low. It works. It may not be pretty, but it works, and we still haven't hit the upside objective yet, so we've got some room. There's still a reason to be bullish. We've got a doji. No pullback, unfortunately, for the bulls yet. Inside bull bar doesn't really prove anything, so it doesn't change. As far as the POC, I doubt it's moved on a doji, but let's see. Same spot. So let's see if we can get a pullback. Okay, they're pulling back, but they missed it by a tick. It's a weak bear bar. We haven't gone through the highs. The upside objective is still there. There's no reason to give up hope yet, but it would be really nice to get a fill sooner than later if they can get a dip here. There we go. Beautiful little doji dip underneath that base. Let me spin this forward a little bit. Bulls are going to be looking for an upside objective, which is already hit. Secondary targets, if they're going to go further, again, still expanding out to the 88s. Target is met, and look at the response off of that. Holy cow. So immediate response off of that scalper's objective, so much so that it went back down to the break-even point. Notice, though, it did not close below break-even and couldn't close below the POC either. Let's shift this forward, see if anything's changed. It hasn't. If anything, it's gotten bigger. 79.75 still holds. So again, upside objective is there. Now they're starting to break out. Can they get it? And there's the full completion of the objective. Now, we do still have that wider completion up here, and, you know, maybe they reach out and grab that. Let's see, as we continue in, it is after 11 anyway, so let's see. And there's the completion, and look at that wick up at the top, and this is current price where we are now. So the bulls have successfully rallied their way all the way up to the highs and completed not just some of these major objectives in the sense of, like, POC breaks and all of that, candle gap objectives, but also massive full flips, massive measured moves, full candle gap objectives. I mean, incredible blow-offs. We also have a POC blow-off that might... did they get that? Oh, they missed it by just a couple ticks. So maybe that's the next thing if they can go through the highs that they're able to reach out for. But, I mean, really, the amount of bullishness here is incredible. And the whole way, along the way, the market could not get under that POC. And once again, that was the big clue. Really interesting. Hopefully you found it useful, interesting, and entertaining, as you know, of course, as usual. If you have any questions, feel free to drop them in the comments below, or if it's a more detailed question, shoot me an email, jhb@ssftg.com. Until the next one, enjoy, rest up, and we will see you all then. Thanks.